Hello and welcome to Commodities Corner. We're back on the shiny stuff today, and as gold continues on its downtrend, I'm speaking to Phil Carr, head trader at the Gold and Silver Club in London. Phil, thanks very much for joining me today. It's been a week practically since we got the latest NFP figures. They were more positive than some expected. Just give us a recap on how gold reacted afterwards.
Yeah, sure, Thomas. Great question. I mean, when the US job report came out, it did definitely exceed expectations on Friday. So we had an increase by 236,000 jobs. So that was well ahead of the forecast that we saw of 160,000. And the unemployment rate fell by 7.7%. So we had a big move. The US dollar surged on the news, and gold price really came down very quickly. We saw that also correlate across to the euro as well. And we had a decline just within literally a few seconds of the announcement. We saw the prices come down, and gold price actually dropped to a low of 1561 an ounce quite quickly. Although we can see that level was, we saw a lot of technical buying. It seemed to entice a lot of bargain hunters on a bit of a buying spree, and we did see gold actually completely whipsaw in price on Friday, and actually came all the way back up again to gain up to 1,579 an ounce. So very interesting, really, price action that we had there on Friday on the news, and yeah, we'll look at the technicals very shortly as well as to what we can expect really for this week and the week moving forward. But certainly we saw a whipsaw in price on gold following those US job figures.
So bring us up to date, if you would, Phil. This gold downtrend looks here to stay for the short to mid-term, doesn't it?
If you look on the chart, the overall trend has been down since really the end of September 2012. And we are in line with the downtrend at the moment. We are, if you actually can draw that on your chart, you can just see a very clear downtrend, which was tested. The real lows that we've tested so far this year were in mid-February, when we came down to $1,554 per ounce. The market since then, it's just really been consolidating sideways. And in terms of the current price action at the moment, we seem to be, if we do break out of 1,600, we've got a key level really of potential resistance, which is going to be between really the 16 level, which has provided some resistance already this year, particularly in February. We saw that just on the 26th of February. And we'd be looking at that whole key resistance area between 1620 to 1635. This is going to be very important to watch whether we're going to get traders then come in the market again to sell this market lower, in line really with the overall trend, which is very much a downtrend still on gold. It's an important level for really the gold bugs, if you like, to really to get in long and to force the price higher. We need to break out of really 1,635 and to get above 1,650, really to break out of this downtrend we're seeing at the moment on gold. If you look at some of the key moving averages on this market as well, they are getting near to signifying that we may be about to see a temporary low in this market, and we may be about to push higher. If we pushed higher, the downtrend, in order for that to actually stay intact, the price would need to be capped around the 1630 level, and then we may see sellers come back in the market and push the market back down. And we could see the real lows of 2012 of 1,530 to 1,520 retested if we do get sellers coming into the market again on a retest of resistance.
Lastly, just looking ahead, next week we've got the latest statement from the Federal Open Market Committee. If the Fed hints further to a cutback of QE earlier than expected, how do you think gold will react?
Next week's FOMC statement should be very interesting. I mean, what we saw on the last statement is during that we did see the gold prices come to 7-month lows. So the last statement, which was on the Wednesday, the 20th of February, we saw spot gold drop all the way to 1,564 USD per ounce, and that was quite a major move actually, and really sparked a lot of selling. A lot of traders got stopped out. A lot of traders were looking at that key area of 1580 to hold. It didn't hold. We had quite a big move to the downside. The Fed minutes suggested that the central bank may stop printing or QE, which has really helped to drive the recent rally in equities. So if that happens sooner than expected, we could see certainly further weakness in this market. So we're going to be watching very keenly next week's FOMC announcement, and also the job report next month will be very important. You definitely do not want to miss that.
Okay, thank you for joining me for that update on gold. We've got a host of other interviews today for you to watch and listen to, including the latest on the Swiss National Bank's rate decision. Do check that out. But for now, and from everyone here at Dukascopy TV, goodbye.